sometimes it kind of feels like a waste of money. It's all you're covering is the what if scenario. What if something bad happens?
Hey everyone, welcome back to another episode of the Retire While You Work podcast. I am Myles Zuger, a wealth advisor here at Adams Wealth Partners, joined by Carson Odom, also a wealth advisor here at Adams Wealth Partners. Carson, what do you got going on this weekend?
I have the privilege of flying out to Chicago today. I am going to my first Cubs game at Wrigley Field. So meet my
Nice.
brother up there. I've never been to Wrigley Field. Been to a few other MLB stadiums. So I have this goal to collect a baseball with the team's logo to every ballpark that I go to. I've got 6 or 7. Actually, one of my good friends, he's hit all the MLB stadiums, which is a pretty good feat for someone our age. So my goal is to slowly make that way. So I get to head out here in a few hours to Chicago and go see a game with my brothers. Pretty pumped about that.
Nice. That'll be fun. I've heard of people doing that before where they go to every stadium. There's how many now? Is there 30?
30.
Yeah. Okay. Awesome.
Yeah. What about you? What are you doing this weekend?
I got no big plans this weekend. So just gonna kind of relax and hopefully it's supposed to be hot here. So maybe try and find a pool,
Do
something
some
like
running?
that. Yeah, maybe get a couple runs in, but I have to do it earlier before the heat kicks in. So
That segues right into our topic of insurance and risk. We were talking earlier about, I used to joke when Miles did an Ironman last fall, September of 23, right? September.
Yep, last year. Yep.
And anytime, whenever he was training for that, anytime that he would like, I was eating like Mexican that day and I got some chips and salsa or whatever, he would want to come over and grab a chip and I'd be like, is that going to hurt you or help you whenever you're running your Ironman? And when we talk about insurance game of risk, that's all it is. It's offsetting risk. That's all insurance is, whether you think about it from a auto policy, homeowners, a life policy. It's truly just an offsetting of risk from yourself to the company that writes the policy or the insurance company.
Yeah, I mean it's just paying less money now in the hope that there's not a big amount that comes due, because when you think about insurance, whether it's life insurance or car insurance or house insurance, I mean really any insurance, like you hope you don't have to use it because that means something's not going well if you're using your insurance. So you're paying for it now in the hope that you never have to use it.
That's right. And you end up getting almost resentful towards interest or insurance because you pay all this money. If you never use it, it's quote unquote a waste of money, because you never needed that insurance. You were paying for it, but you never end up utilizing it. But if you end up getting insurance and then you immediately need it, oh, it's the best investment you could ever make, because all of a sudden you bought insurance to cover you in case something happens. And then something happens and they cover you. Oh, the insurance company is down big. From the insurance company's perspective, they profit on people who never end up utilizing the policy. You got to think, make it real easy. Your auto policy, you pay for car insurance. If you never get in an accident, you never just hit a tree, hit a pole, nobody ever runs into you, you never run into anybody, you're paying this premium, 100, $200 a month, whatever it is. And from the insurance company's perspective, you're great. You're extremely profitable because they don't have to write out on any claims versus the opposite. That's why premiums are higher for people who are more dangerous drivers or more prone to getting accidents, because insurance companies banking on the fact that they're going to have to pay out money to cover you.
Yep. Or areas you live in, et cetera. All that stuff kind of goes into determining how much premiums are in and kind of what you're seeing there. So they're usually a little bit higher if you live in a city, because there's thefts and things along those terms also that can and usually do affect premiums.
Yeah. So a few basic factors of insurance, like we said, there's a main two parties involved. So you are the insured and there's the insurer, or the company that you buy the insurance through. So you pay a premium, which is essentially, that's the cost of having insurance. That's the cost of offsetting risk from you onto somebody else. And there's a term, deductible. It's essentially the insurance company's way of saying, okay, you're still going to have some skin in the game. So before we kick in and we cover things, you're going to have to pay, health insurance common deductibles are anywhere from $1,000, $1,500 up to like, $6,000 or $8,000 on a high deductible health plan. So that is what you are you are liable for 100% of the first X amount of dollars. That's your deductible. Above and beyond that, then your insurance is going to kick in. So it's really pretty simple when dumb the insurance down. It's pretty simple, the concepts of it. There's premium, and then there's also the deductible. There's also the different coverage types, with which we won't go into the details between health insurance, auto, homeowners, life insurance. There's so many different coverage amounts that go into it, but it's really just how much coverage you have in our business. Or would you add anything to that, Miles?
Yeah, I was just going to say, when you're thinking about insurance, I think some of the most common ones are property and casualty, which is, for most of us, they're homeowners, and car insurance thrown inside of there, life insurance, long-term care insurance, which is usually you get that when you're older in age, over 50. And then health insurance. Those are really all the most common forms of insurances. Now there's, for a very unique situation, you can insure almost anything. So for very unique situations, there's companies that work on those policies. You think about, I guess there's disability insurance, which I would throw in there also as one of the kind of more mainstream, call it, forms of insurance. But you can insure just about anything. There's companies that specialize in it. So even if you're outside of those categories, and at the end of the day, it all operates very similar to the way Carson described it. There's a insurance company, and there's you paying the premium, and you just have to you hope you just have to hold up your end of the bargain for what you have insured. But I think what's important is wanting to make sure that you work with a highly rated company, so that if something were to happen and you need to file a claim, you're confident that it's going to get paid out. And it's very rare that you don't see that, but it can happen. And so it's always important that you work with highly rated companies when you are insuring things, and people that you trust and believe in.
What how do you view what company to choose from? Like, for me, whenever I first started, when my wife and I got married 9 years ago, I used who my parents used, local in Smyrna, and got a super basic life insurance policy for her and I. And then also got auto insurance set up through the same place. Got renter's insurance because we were renting at the time before we bought a home. And I was just like, for me, I was like, this is easy. I'm just going to keep this all at the same place. Then they give you like combo line discounts. If you've got all your different insurance lines at the same place, they'll give you some discounts. But from my perspective, I was like, this is easy. I like this guy. I have a relationship with the agent selling it to me. I'm going to stay here. But also realize there's some huge names out there. The people that you see the commercials for, they're the giant insurance companies. You've also got smaller local insurance companies. Personally, I like having a specific agent instead of just somebody on the phone or a claims department, 1-800 number that I'm going to have to call. But I would, if you're starting fresh or you're looking at your policies, they've gone up a lot recently. Get some quotes. Like, it is truly not harmful at all to go and get a couple of different quotes from a couple of different companies, because not all companies are going to quote you the exact same. They have different pricing models they use. So absolutely get some different quotes on all lines of your insurance. Homeowners, auto, health insurance is a little bit stickier and trickier. But I think it's worth getting the quotes.
Yeah. And I think your original kind of thing was maybe, how do you know you're working with a reputable company? And I think you said it. You just make sure that the agent you're working with, well, if you're working with a bigger one, like one of the mainstream ones you see on commercials and stuff like that, you're going to be fine. But if you're also working with an agent who does this every day, and they should never steer you in the wrong direction. They're most likely only working with highly rated companies who do a good job. I know who we have for car insurance. I had never even heard of the company before, and I asked him about it, and he gave me a couple stats and said that they're one of the biggest carriers out there. And I trust him. We haven't had any issues, and so I think working with just somebody reputable who you trust, believe in, they're going to point you in the right direction most of the time, hopefully all the time.
That's right. Is insurance important? Should insurance be a part of your financial plan? Let's just say. Short answer is yes. I don't think, even to drive on the road, at least in Tennessee, you have to have some sort of auto insurance. So it kind of is required. But beyond that, insurance is not a bad thing. Sometimes extensive amounts of insurance can be a bad thing. You can be overinsured. You can be paying insurance premiums way beyond what you truly need for a healthy amount of offset risk. So I would say, is insurance important in an overall financial plan? Absolutely. Disability insurance, health insurance, obviously from day to day. Auto insurance, yes. Homeowners insurance or renters insurance, yes. Long-term care isn't necessarily for everybody. But it is important to at least consider, especially if you are age 50 and older. Then lastly, life insurance. Generally, yes, at some point in your life, there's some sort of life, some amount of life insurance that's going to be important, but it's also important to get the right type of life insurance. So I think the easier ones are auto, home insurance. You know that you need those.
Yep.
And
I was going to add on kind of like the auto and the home insurance side of things. I read a stat recently. I think like, a high percentage, like somewhere between 40 and 60% of Americans could not afford an expense, an emergency expense that they would receive over $1,000. And so insuring against that is super important. Yes, you're going to have a deductible and you're going to have to pay some of that, but it's going to help you in the long run. I mean, if you get in a car wreck and total your car and you need help, I mean, it's going to be obviously much cheaper to pay that deductible than have to go out and get a whole new car that you don't have insurance on, or that's you didn't have insurance on. So
yes,
it helps just when emergencies do happen, your cost of getting back on track, whether it's a car or a house or whatever it might be, is so much lower than, I mean, you're talking the tiniest of percentages of what the actual cost is to get you back on your feet. And that's the sole purpose of insurance.
If there's a takeaway when it comes to property and casualty insurance, this topic, your autos, your homeowner or renter's insurance, if there's a takeaway here, ask your agent if you have one, hey, can you give me a recap or give me a summary of what am I paying for? And the biggest things to note are coverage amounts and also your deductible. Realize that if you total your car, someone runs into you or you hit something, if you have coverage on your vehicle, full coverage, you need to know what's my deductible. What is the amount I'm going to know I'm going to have to come out of pocket to completely replace my car? There's no reason to keep it like super low, like $100, because more than likely you can afford an expensive $100 to replace your car entirely. Two, you can, if it's extremely low, you may be paying a premium and you're like, hey, if I raise this deductible up to $1,500, $2,000, I'm going to save quite a bit of money every single month. So you can say, hey, my deductible is really low. What if we raised it up to an amount that you're comfortable with? Let's say $1,500. What would that do to my premium? Maybe you can save quite a bit of money on a monthly basis or on your premium amount. Also on the homeowner side, same thing. Make sure that, here in Nashville over the past few years, we had great appreciation to our homes. And if you've done any sort of improvement, that's also increased your value. So make sure that the covered amount on your homeowner's insurance policy is enough to truly replace your home if something happens to it, as well as all the belongings. Make sure that you've got to sit here and nobody really has written down every single item they have in your home, but know that that amount to replace everything inside of your house needs to be substantial and it needs to keep up with lifetime and lifestyle income creep that happens over time. Yeah. So that's a great takeaway on those types of policies.
Yeah. And I think on life insurance, people are always like, how much life insurance should I have? And whether they should have a permanent or a term insurance, which that could be a whole topic for its own episode. So maybe at some point we'll touch on that. But when you're thinking about life insurance in general, kind of like the common number that's decided upon is somewhere between 7 and 10 times of annual income. That's just like the easiest way to start. If you research on Google how much insurance should I have, that's probably the common answer you're going to find. Obviously, there's situations where that can be lower than that, or it can be higher than that. But that's just kind of like where the base level is starting at. And again, there's various ways to insure with life insurance, whether that's a permanent policy or more of a term policy that runs out at some point. But having the insurance there to protect you and your loved ones, I think, is the most important thing. If something catastrophic were to happen.
Here's a quick formula. Multiply your income times 10 plus 100 grand for each child. That's not a bad rule of thumb, because the idea is, what you're trying to do is if you both work, you both should have term life insurance. The earlier you buy it, if you're in your 20s, it's dirt cheap if you're healthy. I mean, truly dirt cheap. Still, I mean, even if you're in your 30s, it's really dirt cheap on a monthly basis
Mm-hmm.
for term life insurance. It's supposed to take you through your working years. And then the idea for life insurance is that by the time you're 65 or when you retire, you're self-insured. You have savings to sustain your spouse that you would leave behind if something were to happen to you, as well as your kids. Therefore, insurance is not necessary. That's the whole idea behind term life insurance, is to protect your family or something to happen to you. They no longer have your earnings and savings ability. Therefore, you take care of them. They can pay off the house, fund college, continue paying for expenses on a monthly basis, and don't have to just immediately go into debt. That's the whole idea. And
Yep.
that's why I love term life insurance policies, because they're simple and there's nothing more to it. They're this deep in being able to understand term life insurance policies. It's very easy. They're simple. They're clean. There's nothing hidden in them. There's not this 100-page packet trying to understand them. So yeah, that's the number one way to cover yourself from a life insurance perspective is term life insurance. Talk to an agent, talk to somebody who knows about it, and can walk you through getting some sort of quotes. It's based on your health because, again, talking from the insurance company's perspective, they're covering their risk of what are the chances that this person's going to pass away inside this 10, 20, 30-year term period, and we're going to have to pay out. What's the stat? I think it's like 1 or 2% of term life insurance policies ever end up paying out. So the
Yeah,
risk is low.
it's very low, but I guarantee I can say with almost 100% guarantee that I bet the people that had them were very happy that they had them. And
Yeah.
I was going to add to what you were saying, where I think it's very important for working spouses to have a life insurance. But I think in most circumstances, it's very important for maybe if there's a spouse who's stays at home to also have insurance, because what you don't think about is if that spouse is at home taking care of all the household duties, taking care of the kids, getting them to and from school, daycare. I'm not saying they're daycare, but essentially a daycare service like that they're always home with them. If that spouse were to pass away, the working spouse is going to have to probably hire somebody. They're going to be grieving and trying to figure out what life is now like. And so what that does is it does it the same for the working spouse, but it truly buys peace of mind because it maybe allows you to take some time off work so you can get things figured out, get back on your feet and get through this chapter. It also is going to allow you, when you get through that, to maybe have some care in the house that you otherwise maybe could not have afforded. And so it doesn't need to be, it probably doesn't need to be those numbers that we were throwing out, 10 times income, but having something, maybe it's like a couple 100,000, something like that, as insurance to cover the spouse, even if they're non-working, to help you through that period should a catastrophic situation happen.
Yeah, that's it. It's super important to have insurance and all these different aspects, and we could truly dive deep and spend a lot of time on auto insurance, on homeowners insurance, on life insurance, and the different types there, especially long-term care insurance, health insurance. We could spend so much time, but generally, we just wanted to give a brief overview of why it's important in a financial plan and why sometimes it kind of feels like a waste of money. It's all you're covering is the what if scenario. What if something bad happens? And that's why you don't necessarily want to overcover yourself and be paying these massive premiums for so much insurance that you're never going to end up needing to tap into all that insurance. So that's why it's important to get the balance right. Talk to somebody that is experienced in this realm who can help you answer the questions of how much insurance should I have. What else, Miles?
Yeah, I would disagree with that. I think when you think about financial planning, I know we recently did an episode on estate planning, but when you think about a financial planning, I think any good financial plan is obviously going to have the investments and that part of the plan, but I think it's also going to have an estate plan like we recently talked about, and it's also going to have insurance inside of it, because that's just going to help provide security and coverage on maybe you or your property, protection for your family. And then we didn't, this is again not even to go in the weeds on this, but some policies there's maybe some tax benefits to it also, and then kind of that estate planning piece. So there's more than just the coverage of loss when you're talking about insurance. I really do think that it's a core piece to any good financial plan.
That's right. Couldn't have said it better myself.
Thank you for joining us on today's episode of Retire While You Work. We've really been enjoying doing these. Carson, have a good time at the Cubs game this weekend.
Appreciate it.
Any opinions are those of myself and not necessarily those of Raymond James. Expressions of opinion are as of this date and are subject to change without notice. The information contained in these podcasts do not purport to be a complete description of the securities market or developments referred to in this material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Every investor situation is unique, and you should consider your investment goals, risk tolerance, and time horizon before making any investment. Prior to making an investment decision, please consult with your financial advisor about your individual situation. Any hypothetical examples are for illustration purposes only. Actual investor results will vary. Raymond James does not provide legal or tax services. Please discuss these matters with the appropriate professional.